I would like to differentiate here between two topics. One is the what we call the understanding of the financial statements, and the second is what we call as financial acumen. So while a detailed understanding of financial statements are there with the chartered accountants and people who are specifically in this line, uh, every person who's involved in any kind of business activity for an organization or for self must have a very good financial acumen. So what do I mean by financial acumen? It is the ability to interpret and see what is being represented in these numbers of the financial statements. Now, I'm not talking ratio calculations and all, no. But for example, take this particular organization being depicted here from 2007 to 2011. If you see, the organization grew in revenues up to 2009, and then the revenue started falling, and then there's a steep fall in revenues. Obviously, this particular organization is in trouble. Now, at the same time, if you see the cost of generating the revenues, that has also steadily been going up and down based on the revenue flows, which is okay, which is the way it should be. However, it is to be seen as to what's really happening. Another thing which any financial acumen, prudence financial acumen would show is that while revenues are here, these are perhaps the invoices that the organization has raised. Have these invoices been collected? Has the money been generated for the organization, or it's just being shown as revenue and it's deferred income? Now, when we look at the operating expenses, you see some interesting things here. Like as the organization is going down, you suddenly see that that there was a spend on R&D here. Of course, we got to see as to what do they mean by spend on R&D. Zero spend on R&D. What happened? Something perhaps being reported differently here and there. How can a sales SG&A be zero here? So there is some change of the reporting standards, or something has happened which needs to further introspection. Total operating expenses are listed out here, and a subtraction of the gross profit from the total operating expenses will give you the operating income. Now, this is a very dangerous thing. Here, an organization is there which is running operations, which is making money, losing lots of money. What kind of business is this? Where an organization is losing money for every product it's selling? Something is grossly wrong, therefore. Forget other income. It's normally other expenditure is an important aspect to see. If the other expenditure is so high, what is this whole thing about? Then you see income before taxes, and if you come to forget the taxes, they are an essential part of doing business. One can't get away from taxes ever. But if you see the net income of that particular business, the net income is a cause of great concern for any organization. You see again, like net income in positive, negative, horribly in a negative. How can such an organization survive? What is it in business for? An organization is in business for generating profits. Fundamentals. Now, if this is not happening, then what has gone wrong? Why has it taken over 3 years for the organization to fix it, and still it has not been fixed? Why was the organization spending in R&D here and it has totally stopped spending in R&D? What's happening? Something has totally gone wrong and out of sync. To understand what has happened more, of course, one has to understand what's going on inside the organization. But the other two statements, other than we are now seeing profit and loss, the other two statements of balance sheet and cash flow statement can actually throw some light on what's going on in this organization. Remember, great business people are not the ones who are able to write this. You'll have your finance team and your chartered accountants to do this. But what you should be able to do is to see between the numbers and be able to generate reasonable logic of what's happening in your particular organization. These numbers are available for everyone to see, every manager, every employee.